Hello and welcome to a new review. We are gonna do a roast of this investment portfolio. And this is a portfolio that is very interesting with Amazon CRM, Uber, and he's asking very good questions on how to make it better. So let's start with the portfolio roast. Now, this is what he's saying. He says that he has some money. He has 6.6% on cash and he will theory invest. So now the good question is, should he invest or not, and in what? Remember, this is not a financial advice. This is just an analysis of this portfolio. So let's analyze the portfolio. Of course, we need to know what are his goals. If this is a long-term portfolio, a trading portfolio, is this a portfolio only for 2025? We don't know because the information is incomplete here. But what we know are his analysis on how he's focusing on what to add or not. So we're gonna run one assumption, which is, okay, this portfolio could be long-term for the types of companies, especially for his large position that I'm seeing on Amazon. Is 31% of his portfolio. So let's start by analyzing Amazon and why it's so large. We don't know when he bought Amazon, but let's suppose that you're doing the portfolio analysis. Now is in an all-time high. So if he bought that in the past, for example, 5 years, especially 2022, well, he should be up by a lot. Okay. If he bought in 2021, just increase almost 80%, which is pretty good for Amazon. Of course, as a max, Amazon has had two key moments. One, remember that for many years, it was a stock that no one really cared. Like many years under, I will say till 2010. So Jeff Bezos was right during all this time, but no one listened to him. Okay. Then 2010, and then it became a spectacular growth up to 2021. But then you have a tremendous crash. This was a good buying opportunity, and this is a good example. If you're investing in a long-term basis, well, you should buy, because a friend called me today and said, "Hey, Francisco, the market is crashing. What do I do?" Man, you have to buy. Remember Warren Buffett. When there is fear on the market, that's when you buy. When there is greed on the market, that's when you sell. Of course, it in some way is contradictory to our brain because like we feel happy when everything just keeps going up and up and up. But that's how not the nature of the market works. So, okay, he has a very good position. Let's hope he bought it in the past, let's say 2 years, and he has building his position is 31%. And he's asking, man, should I buy okay, Uber or ASML? Okay. Finally, he's not asking to buy more Amazon. I will not put Amazon, okay, because it's all-time high. And the market just go down, so that's another opportunity. Let's go for CRM stock. Well, let's see Salesforce in the past 5 years. Similar to the Amazon growth, it grows from $131 to $333. In 2025, well, it's not performance very well, but in the past year, it has grown more than the Standard & Poor's. So that's the reason his position is also pretty high. So if we combine his Amazon shares with his Salesforce shares, well, it makes almost half of his portfolio. And of course, the good thing about the Salesforce shares is that you have a dividend, that this works because this is a growth stock, if you can see. Also, it had in 2021 a high, then went down and crashed like crazy, and then up and then crash a little bit, So these are the moments to buy. So right now it's going a little bit down. Okay, maybe can go below 300. That will be a good buying opportunity. But as well, this is a $320 billion company. Mark Benioff has said that now he's replacing a lot of his positions. I remember one of Benioff's tweet that he said, "Man, I just want to hire as many experts on artificial intelligence right now, and I'm willing to give them $1 million plus compensation, plus stocks, plus everything." Of course, Salesforce is such a great company that is being implementing their technology in many places, and people just love it. So that's the reason his portfolio, in that sense, if you're thinking a long term, Salesforce could be a $1 trillion company by 2030. So it's pretty good. Okay. Now, let's check his other position is Google. And what I like about Google is like, hey, as soon as ChatGPT came, everyone asked, okay, what is the Google response? And then nothing and nothing and nothing and nothing. And then finally, Google start to develop their tools. And one of my favorite tools right now is the Google AI Studio, which I've been playing around. I built a video about it. I will recommend you guys just to use, for example, the stream real-time analysis of Gemini. Oh, it's amazing. Their model Gemini 2.0 experimental. You can try for free. The tokens are, oh, they're not free now. Oh, it's interesting. But okay. So you have to be mindful. Okay, here. Yes, it's free. Yeah, there you go. So be mindful about that process because Google has been developing great technologies. Another one that I love about Google's new technologies is Notebook LM, one of the best systems to organize stuff. And of course, YouTube. And that's the reason you're watching YouTube. And I want to show you just one thing about YouTube watching time compared to other platforms because it's just going like crazy, you know. um One of the key things about, for example, YouTube versus Netflix, which if you want to know more about the Netflix stock, I cover the 4 quarter elements, is that in one way YouTube is becoming like Netflix with their YouTube Premium, and in the other, Netflix is becoming like YouTube with their ads. Okay, and then if you can see here, it's just growing the demand for users in the past years. You know, so it just grew from 2019 from almost 15 million users to more than 46.6 million users that are paying for YouTube Premium. And why? Well, because YouTube now, more people are watching more YouTube. Okay, that's one of the key things that is happening. Therefore, the alphabet stock, Google, is doing things in a very right way, even though they took time. One company that is not doing things in the right way for AI actually is Apple. Like, no one understands. I like my iPhone, but I haven't changed it like in 4 years because there's no innovation in Apple. I haven't seen anything. Oh, now you can create your sticker or stupid things like that. So yeah, like Apple, I don't see Apple very interesting as a stock, I have to say, because their Apple Intelligence is man, Apple Intelligence is like one of the worst things they ever launched. No one likes it. They had the opportunity to transform Siri into your personal chat GPT experience and they didn't do it. Actually, they can still do it, but I don't know. I don't know. They should just fire Tim Cook right now. So Google is a strong stock. Okay. Let's see the status right now. For the past 5 years, similar is in an all-time high in terms of the stock, but that's happening with the Magnificent Seven, so it's normal. So if you're gonna buy Google, think about to buy under 200, even when it goes to dumps like 170. That will be good time, and their dividend yield is 0.4%. So yeah, Google is still very powerful. Android, YouTube, it's doing great stuff in that sense, and all the AI tools are just incredible. So now, here comes the question from Quality Invest 5. He says, okay, I want
This stock portfolio is heavy. Let's roast it. Hey there, be honest. Does your investment portfolio needs a reality check? I'll break it down for you in 10 minutes. Personalized roast that's honest, actionable, and maybe a little bit brutal. I'll show you what's working and what's failing and how you can make it better without any fluff. Just straight up solutions for your goals. Oh, and I deliver your roast within 72 hours so you won't be left waiting. Ready? Go to franciscamoney.com or hit the link in the description and request your roast today. Let's fix that portfolio.
Want to either invest Uber or ASML, either do a 50-50 split, and then he just runs his logic. So let's go and answer this question from him. So let's go to Uber and let's see. 5 years again. Beautiful. That was a great entry point. The people that bought it at 21, amazing. But as you can see, compared to the other stocks that we have seen, because it's a very young stock, of course, still is in this phase of discovery process. Okay, so you can always find it under $60 is a good price. Right now, when he's asking to buy, well, let's see, let's analyze. Has a market cap of $144 billion. Okay, and his financials are pretty good, and I'm gonna use Perplexity for that. So I don't know if you use Perplexity, guys. 5 years, so we can analyze together. And now I'm using Perplexity Pro to give you more info, so we can really go in depth about what they have shown us. Okay, so number one, from 14 billion in 2019 to 37 billion in 2023. Of course, the setback was in 2020 when we have COVID and all the process, but it's pretty good because check this. They lost money, lost money, lost money, lost money, and finally they have a profit. So what it shows is that Uber is really on the path of becoming a very interesting company. And if you can see, the gross bookings of billions are just increasing. And this is very important. Like, people are really using more Uber. Okay. So, and as a stock, it's a company of $144 billion. They try a lot of the autonomous driving stuff. They get rid of their autonomous driving business units. Actually, they sold it. Uber Eats is good in certain countries. In other countries, they just beat it. So okay, so it's 144 billion right now. If you want to buy some Uber under $60, will be my entry point. That will be my analysis on Uber, because of course you can compare Uber in terms of DoorDash, for example, which is a $76 billion company, which does the same, but it's a big competitor, or Deliveroo, which is a $2 billion company, which could be another interesting option that you don't have. And you can see the stock is just like this for many years. Okay. We'll have to go further, but I'm not going to do the analysis of Deliveroo today. Okay. And then he asked about ASML. Okay. So the issue with ASML is the following. ASML is a $275 billion company. This is in euros, okay, because it's a European company, and it's the one that develops the best technology. So let's go to the ASML 5 years financials, because I'm gonna show you the ASML machine. It's one of the beautiful things that they develop. These machines, imagine, are some of the best in the world. So those are the machines that TMC in Taiwan and in Korea, Samsung and others buy from ASML, because those are the machines that you use to develop chips, okay, and semiconductors. So this is ASML. So it's incredible. If we have more AI, we need more semiconductors and more chips. If we need more chips, then we need more machines. And ASML right now is like the leader in that. So let's go to ASML. It has grown from 11 billion to 27 billion. Okay, very good. Their net income, this is what I like more about ASML. It has grown from 2.6 billion to 7.8 billion. Okay. And their gross margins are consistent or above 50%. So, of course, as a company that is developing the ultimate technology, well, they need to keep developing these amazing machines. Okay, this is the beauty, you know. They call it, and this was a wider article that I recommend you to read. So ASML is performing very well. Now let's see, in the past 5 years, it peaked on €1,000 per share. So if you believe that in the next 5 years we will need more microchips, therefore TSMC and other big companies are gonna request more machines from ASML. And let's just ask this question: how many machines does ASML sell per year? And I mean the pro version, okay? Because for in-depth analysis, I like to use the pro version. Check, this is the data. 502 systems in 2023. And look, they're increasing the amount of DYB system. And I'm going to show you what is one of the DYB system, which are the lithography systems. Okay, which is the crazy. This is the most advanced technology. A lot of people in the US, they just want to ditch Europe, but these are the guys that develop the machines that all the top computers are being developed, and the microchips and the semiconductors, is with this. So what is showing ASML? That is a $280 billion company, that their share is 30% lower than their all-time high, and they're increasing the profitability, and they are giving more machines. And what we have seen is simple. What do I mean by simple? Is like more machines are gonna be needed, because a lot of people are saying, when DeepSeek came, DeepSeek has shown that you just need a couple of $1 million to develop. No, actually, the good thing about DeepSeek is that now more people will have better systems. Therefore, people will need to buy more and implement more in a faster way. So, if ASML is 8.8% of his portfolio in this way, based on the type of companies that he has, I will, from his 6.6% cash, if he wants to put it right now, it will be on ASML. And I will even, put like half of that cash, like 3% of that cash on ASML, because it's a good price to buy ASML stock right now. Their numbers are very well. Companies are requesting for more machines, and they don't have any good competitors. They're startups and other companies that develop what ASML does, but it's not the same. Like, ASML is an amazing thing. And another advantage of doing that, think about this. He has Amazon, Salesforce, Google, Uber. Those are US based companies. Okay. He also has MasterCard. So if he wants to balance more his portfolio, adding more ASML will be a good call, because this is a European stock. Okay. And that's it. That's the good thing about changing this portfolio. Put it here, guys. And it's you can read it, Dutch company from the Netherlands. So yeah, that will be my analysis of this portfolio for today. Please subscribe, follow, and tell me, who do you want me to do the analysis and the rows of any portfolio. Thank you very much, guys, and have a great day.